in focusing on business and investment decisions, you try to you narrow it down to the things that are knowable and important, and then you decide whether you have information of sufficient value that, compared to price and all that will cause you to act. What others are doing means nothing. It's price and all that will cause you to act. What others are doing means nothing. It's what Graham writes in chapter 8 of The Intelligent Investor, that the market is there to serve you and not to instruct you. That's of enormous importance. When people talk about momentum in stocks or charting or any kind of things like that, they're saying that the market is instructing you. The market doesn't instruct us. The market is there to serve us. If it does something silly, we get a chance to do something because it's doing something silly, we do it. But it doesn't tell us anything. It just tells us prices. And if the price is out of line with where the facts and reasoning lead you, then action is called for. And if it doesn't, you forget it and, go play bridge that day, and the next day see whether there's something new. And the nice thing about it is there always is something new. I mentioned the LTCM crisis. We on Sunday from people that had portfolios that were in trouble. Now, I will tell you that if you can make a lot of money on Sunday, you may not get a chance very often, but any calls you get on Sunday, you're probably going to make money on. Things are really screwed up if you're getting calls on Sunday. And all you have to do is make sure that you're the callee and not the caller on Sunday. But if you get those calls, you get a call on a Sunday and somebody says that the off the run is trading 30 basis points away from the on the run, all you have to do is decide how you handle that particular piece of information, whether it's correct in the first place, but how you handle that piece of information, whether you can play out your hand. You never get in a position, obviously, where the other fellow can call your tune. You have to be able to play out your hand under all circumstances. But if you can play out your hand, and you've got the right facts, and you reason by yourself, and you let the market serve you and not instruct you, you can't miss. Charlie?
Well, I would say some of you probably can miss.
I would say Charlie can't miss, I'll put it that way. He'll agree with that. You have anything further to add on? Okay. At least I've got him off that previous subject. Number 11.
It really doesn't make any difference. I mean, we don't pay any attention to what people say about Coca-Cola stock or Gillette stock or any of those things. I mean, on any given day, 2 million shares of Coca-Cola may trade. That's a lot of people selling, a lot of people buying it. If you talk to one person, you'd hear one thing, and talk to another. You really should not make decisions in securities based on what other people think. If you're doing that, you should think about doing something else, because a public opinion poll will not get you rich in Wall Street. So you really want to stick with businesses that you feel you can somehow evaluate yourself. And I mean, Charlie and I, we don't read anything about what the economy is going to do, or the market's going to do, or what anytime I see some article that says, these analysts say this or that about some business, it doesn't mean anything to us. You cannot get rich with a weather vane.
I would say this in terms of predictions, and I know the spirit in which you asked the question, but there's a market out there all the time, and people love to hear predictions. I mean, if I said I was going to offer a bunch of predictions today, I mean, we would have 1 million people here. I mean, they're dying to have predictions, and speeches at Rotary clubs or trade associations or whatever. They just plain love it, and that's what a whole industry is built upon. In fact, we usually bet against them in terms of super catastrophes. We know there will be a 7.0 or greater quake in California in the next 50 years. We don't know where it'll be or when it'll be or anything like that. We're willing to pay out a lot of money if it happens tomorrow. And because people do worry about catastrophes, and in this case it's perfectly proper with insured values, but it just isn't any way, in our view, to get through economic life. Charlie?
All of these economists with 160 IQs that spend their life studying it can you name me one super wealthy economist that's ever made money out of securities? You know, I mean, just go down the list.
No.
No, Keynes actually, in his early years, tried to.
I've not earned any stars for my past economic predictions, and the good thing about my economic predictions, if I even do make them, is that I pay no attention to them myself. So, I really and the way we pick our investments is we just don't get into the macro factors. I can't recall a time when Charlie and I have looked at a business, either buying it in its entirety or buying pieces of it through the stock market. I just macro conclusions are just never enter into the discussion. You know, I mean, if the guy comes in and says, I think GDP will be 4.6 this year instead of 4.3, so what? You know, I mean, you're still trying to make every good loan you can make, and you're still trying to take in deposits as cheap. You should be trying to cut costs wherever you can. It's got nothing to do with running the business. So if we ever get a economics department at Berkshire, sell the stock short.